When Bank of America Merrill Lynch needed to build a business in the Middle East where it could tap the oil-fueled fortunes of sovereign wealth funds, it turned to Ferris Noujaim, a longtime Bear Stearns banker with roots in the region. Now Merrill is focusing its attention back on corporate America, and once again it's turning to Ferris Noujaim. As Executive Vice Chairman of B of A Merrill, Ferris manages the firm's relationships with many of the country's top CEOs. And over the course of his career, he has advised on more than $300 billion of M&A and helped arrange more than $1 trillion of financing. Ferris is here on the InsideTrack this morning. Ferris, good morning to you. Great to have you back. Let's talk about what's going on in capital markets. There's a lot of IPO activity. There's a lot of secondary offerings. There's a lot of M&A, the biggest year so far since 2007. And we've talked, you and I, and here on the show, we've talked about the factors behind it: cheap debt, economic growth, profit margin expansion, rising stocks. But the biggest seems to be CEO confidence, right? If the CEOs don't want to do it, it's not going to happen. Right now, how strong is that CEO confidence, or perhaps how fragile is it?
No, I think it's very strong. I think it's the strongest in recent memory coming out of this credit crisis. I think the focus at the beginning for the CEOs was to continue to build this fortress balance sheet. I think we're past that stage now. Most CEOs are focused on growth. Organic growth is hard to come by in an economy that's growing 2.5% to 3%. And cash balances are building up. We have almost $3 trillion of cash built up on corporate balance sheets. That's the largest absolute number, the second largest of cash to GDP since the early 1950s. And with debt relatively cheap and terms relatively fair, it's made a very strong market.
So on the basis of that, is it reasonable to say the momentum will continue, that we will, over the course of, at the very least, the next 6 months through the end of the year, continue to see more stock offerings, continue to see M&A accelerate?
Oh, absolutely. You will see the trend in the various industries that have been relatively strong: media, telecom, energy, natural resources, real estate, retail. They will continue to be very, very strong.
What are some of the dominant themes that you hear from your clients? Technology, of course. We've seen so much of that just yesterday with Skype and Microsoft. So let's talk about some of those, if not the specific deals, what we see happening within certain sectors. What are the dominant themes driving all of that activity?
I think the dominant theme, CEOs take a step back and they're making a bet in many ways on how our world is converging. We were talking a little bit before about iPads and just how prevalent that they are. As an example, there's almost not a business meeting that I attend with CEOs that most of them just have an iPad now. That could be a U.S. CEO or Middle Eastern CEO. The worlds are converging, and they have to make bets. And I think Microsoft Skype is part of that convergence trade that's going on. And you're going to see many companies get into different industries as those worlds converge.
Let's talk about some of the risk factors for a moment. How concerned are the CEOs that you talk to about the game of chicken being played over the debt ceiling, number one, and number two, the coming end of QE2? It is literally just 6 weeks away.
Sure. Look, very much concerned, and I think most CEOs have expressed the concern on. I mean, they're concerned about the worlds they can control. Quantitative easing is not something that they have direct control over. And what they can control are their growth and how they approach their various markets. And as I said, where do they see themselves 5 to 10 years from now?
All right. Before we turn to global growth, let's take up this issue of CEO confidence again, because you say it's resilient. What I want to know is how susceptible is it to the vicissitudes of financial markets? What happens if markets fall out of bed? We had a big commodity sell-off last week. Stocks are dropping at a fairly rapid clip this morning, both in Europe and now again in the United States. We've got Treasury yields back under 325. We've got gold under $1,500, oil well under $100. What if it continues? How long does it take before a market sell-off begins to affect CEO confidence?
Well, I think the majority of them will view that as a buying opportunity, given that they've been focusing the last few years on building that fortress balance sheet. So they've put themselves in a pretty strong position, pretty liquid position. Cash balances are pretty high. And almost every acquisition is accretive with interest rates that they're earning on their cash so low.
What about taking on the rest of the world? Are American CEOs ready for that challenge? Are they worldly enough?
Good question. I think the majority are. I think emerging markets, the majority of them view that their growth has to come from emerging markets, given our economy is growing at a relatively slow rate. So the majority of them, their vision of growth is from the emerging markets and the various emerging markets around the world. So yes, I think so. I think some can definitely do more. Middle East is an area that has not been mined as much, but it will come because that's where the growth is.
Now, speaking of the Middle East, you've spent so much time there, you were born there. How do we keep, or how does the leadership in that part of the world keep the political changes, the dramatic changes taking place from destabilizing the economy and destroying the growth opportunities that exist not just domestically, but for foreign investors as well?
Absolutely. Look, take the Middle East. That oil wealth will remain there for our generation, for future generations. The answer is building a strong middle class. The Gulf and certain countries away from the Gulf have already begun building that. And the stronger the middle class that part of the world builds, the stronger their economies are going to be.
Well, it's a thesis we've seen play out in countless different places around the world. Ferris, so good of you to join us here in the Inside Track. Ferris Noujaim, Executive Vice Chairman at Bank of America Merrill Lynch.